This is the market efficiency paradigm, and what this generally is depicting, or what I was trying to communicate by drawing it out, is we as new traders are collectively part of this larger whole over here of uninformed money. And whether we acknowledge it or whether we believe it or what, we will invariably come in contact with the understanding that there is a smart money group of traders out there. And when I first got involved in trading, I didn't know anything about smart money. I just knew that the markets were potentially there and I could be profitable. And in fact, I was going to be profitable. I knew it. I couldn't believe that I'd ever lose money until I lost it. So when we as traders look at the marketplace as new investors, new traders, new speculators, we may or may not have the understanding that there is a smart money entity out there. And we as the larger populace of retail-minded trading, we think because of our sheer vastness, okay, we are the driver, okay, of this apparatus that's called the marketplace. And we tend to think of ourselves as the drive axle of what makes the markets go up and down, which is that's the facade of supply and demand. That's the facade of trend lines driving price when it touches it. That's the facade of moving average crossovers causing prices to go up or down. That's the facade that's perpetuated, and we are led to believe that that's exactly what takes place. So if anyone knows more about being in this group over here, trust me, it's me. I've been in this group enough to know that I learned more about this group over here that doesn't like to draw too much attention to itself. But contrast that with everybody in the retail. We all have Twitter accounts. We all have MyFX books that we're sharing. We're all trying to be on Instagram showing Lamborghinis and whatever else. Houses, cars, boats, yachts, girlfriends, they ain't even yours. Everybody is living large over here in the uninformed money. And smart money's over here quietly just doing their thing. Who's inside this small circle over here? The banks. Who's in here? Everybody on social media. Everybody in a retail account. All the gurus and teachers out there that have things that they're selling, services. And see, this group, this large populace of people, they think, and I was part of this group initially, they think that the sheer vastness and size of them is much more controlling in terms of where price is going to be driven higher or lower because of the buying and selling pressure that's equated to their mere involvement in price. And that's a facade. This huge populace of trading people or traders, community in the retail realm is really not that big. But we are led to believe that we are huge. And we are given this idea of ourselves that we're giants. We push price around. And we don't. We don't. In fact, it's this small little group of traders, okay, they're the ones that influence this entire mechanism that we call the markets. This small little group of traders is actually the drive shaft. And if this was a belt, like on a car, okay, like an alternator, this is the actual motor spinning the whole price higher or lower. It's not this big circle of people. They are the ones that make price go up and down because of their buying and selling interest. Because the supply and demand factors around them, that's what pushes price around. That's a facade. And I'm here to tell you that you need to put that to bed now, because I'm going to level everything you've ever imagined about the marketplace and how it really works. You have no idea where we're going. And you need to leave this realm and this circle of people and their thought processes and transition and have a paradigm shift in your thought process about how the markets are efficient. Because they're not efficient for the speculators. They're efficient for the smart money. The banks drive price. Whether you want to accept it or not, that's what's going on. Are you a lamb or a lion? Which one? Because one of us is going to eat meat and the other one's going to stand there looking stupid eating grass. I don't want to be a part of this herd. I didn't want to be a part of it. Once I understood where I was, I wanted to get out of there, and I wanted to live over here in this small little area. And for years, I quietly made money doing nothing but focusing on the things I knew that this small group of entity of traders did. And I looked at these individuals initially with disdain, thinking, I'm going to come after you. I'm going to devour you. I'm going to do the same thing. And then as I looked at it more and more and heard stories about people ending their lives, losing their homes, marriages, it tugged on me, and I didn't want to just be over here being like the banks. If you were honest with yourself, if you've traded at any time, and you look back on your trading, you probably looked at the market and you saw something like this. You knew something was going on, and you just couldn't put it together. You see these vague things that take place in the marketplace. Your stop gets run. It looked exactly like it was going to go up, but it came all the way down, knocked you out, and then went up. You see these things happening to you, you just can't figure it out. You know there's something to it. You've had the sensation that, this is rigged, my broker's out to get me. It's not really your broker. It's the interbank feed that drives price against the funds. And the brokers are going to expand the spread as well on you and knock you out. When you look at the price action as a new trader, and you didn't have this exposure to understanding how the markets are being driven and manipulated to the degree of every single minute detail, they're absolutely controlled. It's an AI. It's artificial intelligence, and you are not trading against a person anymore. It's a computer program that delivers price, and it knows human behavior because it's the same way it's been always. Fear and greed. Suddenly you understand that there's something that's been there all along. Now you can identify it. And what's more important is you understand how to track it and do the same thing it does. And by default, you become a resident of that small circle. Because this small circle is the drive shaft. Which makes the markets go around. It's not the big populace of traders. It's the liquidity provider. So you need to be thinking like this small group is over here. They're not trying to draw attention to themselves. They're not trying to be online flashing this and flashing that. They're just quietly in here skinning people alive. And you've been there before, just as well as I have. You either stay in this business long enough to leave this group and come over here, or sit back in the middle here. You get real close to being there, and you get bounced back to this group. You get real close to getting over here, and then you start developing a little bit more, and you play tug of war. Now, in the first video, I gave you elements to a trade setup, and I gave you two characteristics to it. There's context and framework around the trade, and then obviously those refer back to institutional order flow. So you have to be able to bridge the two, understanding expansion, retracement, reversal, and consolidation, and applying them to respectively order blocks, fair value gaps, liquidity voids, liquidity pools, stop runs, and equilibrium. What does that mean for us, for instance, in the scope of price? How can we use these ideas and make them applicable to price? Now let's get back to the interbank price delivery algorithm. The daily range structure. So we can see the interbank price delivery algorithm on a daily basis by studying these events and then seeing it over a period of time. You'll know what is most likely to happen. Now let's look at it a little bit further. If we're looking at price delivery, and this is the model that comes by way of my understanding of how the interbank feeds price to everyone. If we're focusing on delivery of price, we have to understand that it all starts with a consolidation. Nothing can happen until consolidation. Consolidation is when the market's quiet. Why? Why is that important? Because that's when the orders are building up in the marketplace. The market makers will allow orders to build up above and below the range. The next stage is always expansion. It's not consolidation to retracement. It can't retrace. It hasn't moved anywhere. It can't go consolidation and reversal because it has to come out of the consolidation. So when you see a consolidation or holding pattern, you got to think the next leg is going to be in price. It's going to be an explosive move or an impulse leg. Impulse price swing. Movement. You need to see movement. By determining what that movement is and what direction it is relative to the conditions you're trading in, Once we're in the expansion stage, okay, then you have a choice. It can retrace, come back to the order block it just left behind, and then recapitalize that, and then make another leg up or down relative to the direction it's moved. Or once it's moved into expansion, it can reverse. Once it reverses, okay, there'll be another expansion, and then it goes back to a consolidation. The main thing is I want you to understand is it never goes consolidation retracement. It never does consolidation reversal. It's always consolidation, expansion. And then from expansion, it goes either retracement or reversal. When you understand this algorithm, the way it moves and the way it operates, it's very generic, it's very systematic. It has only a few options to go to, and they're time sensitive, they're day sensitive, okay? They're intermarket related. All these things are going to blend together, and you'll know exactly how I'm doing these things internally. And I'm doing it on the fly. I'm not measuring things and writing this down, writing that down, making notes over here. I just know by looking at price what I should be seeing. And you see it. I'm thinking out loud in the videos when I'm doing the live sessions with you. All aiming at your better understanding of price delivery. When you have higher time frame directional premise understood, and then you look at this price delivery algo, it's so easy to know what the price is going to do. Every single day since the last week of August, we've been together. And every single day I've given you something that went right to the pip or had an explosive direction move where you could have taken 50 to 60 pips out. And I don't trade that much every day. But I'm showing you, by desensitizing you to fear and greed, there's no need for those things. What we're teaching is consistency, the ability to see these things happening all the time, and also exercising willpower on not wanting to make money. So you're suppressing the desire to make money, you're developing your patience, and you're learning a great deal. You have no understanding of how much you're learning just in these first two videos, but I'm telling you, you'll be able to look back on this months from now and say, man, that was a huge step I didn't appreciate until now.